Hey everyone, we are live. Thank you so much for joining me. Can't thank you enough. I really means a lot to me that you are here. So, if we haven't met yet, my name is Mitch Goldberg. I'm a financial advisor. I've got 30 years of experience under my belt. I have helped so many clients through thousands of different situations, and that's what gives me perspective, experience to continue to help people. That's what this show is all about. You're watching a new episode of Be the Boss of Your Money, and this is all about helping you to become your financial best possible financial version of yourself. How about that? And we talk about investing a lot here. And I think that's very important that we know how to invest properly. We talk about personal finance, financial planning, business, and a number of other things. So welcome to the show. We're going to talk about market cap weightings in certain sectors. It's a big deal because there are a few stocks that are really throwing the whole market around. We're going to have a market wrap, and we're going to see what the movers are of this particular market. And just a special announcement, I'm having a guest on Monday, my friend Michelle Blum. If you're a regular watcher of my streams and my videos, you've seen her as my guest in the past. She is a very, very successful, smart, super intelligent business owner. Nutrishmish is the name of her business. So we're going to talk about what we've done as business owners to adapt, we've done personally to adapt to this crazy, weird social distancing climate that we find ourselves in. And I'm going to have guests all week next week, people from different walks of life who are business owners. We're going to talk about what we've done to adapt. We want to share our ideas with you because maybe some of the things that we've done to adapt will help you, and vice versa. So if you're watching this live and you have any questions, words of encouragement, hit me in the comments below. I love checking on those. If you're watching this in the replay, I'd like to welcome you as well. It's very important that you're here. And if you have any questions or words of encouragement, let me know in the comments. I will be checking for those, and I will get back to you. And it always means a lot to me. So without further ado, let's roll the introduction. We'll go through some shout outs. And I have to look over here to make sure I hit the right button. Here we go. And we are back. This is a week where it's just been a lot of coffee. You notice that? There's something else I noticed also. So the essential thing is this. We had a nice, strong up week. This is only the second back-to-back positive weeks that we've had in a month and a half since early February. It's hard to believe we haven't been able to put two back-to-back positive weeks. Such a difference between, the second half of 2019 and the first few weeks of 2020, when you just couldn't miss. The market just never stopped going up. What a difference a few weeks can make. But that's what a pandemic can do, right? Pandemics have a way of doing that to us. So let's take a quick look, and we're going to do a share screen. We're going to wrap up this week. Make sure that you are armed with not just the information, but with the perspective, with the knowledge that you need to get through the next week and to be better with your money. Because let me ask you something. Are you the boss of your money? Or is your money the boss of you? It's very easy to lose control. You don't even realize you've lost control of your money until it's too late. You're behind the 8 ball. And then you're thinking, how the hell did I get to this point? So we need to make sure we have a good perspective. So I'm going to do a quick share screen. Love my share screen. And here's what we're going to take a look at. Share. Okay. So the first thing you're going to notice is the Dow put up one hell of a day today. All the major averages had a pretty good day today, but the Dow was the winner with a 3% gain. Then the S&P 2.68, NASDAQ up 1.38%. NASDAQ was only up a little bit, but keep in mind that NASDAQ has been crushing the other major averages every day this week. So, NASDAQ wasn't up quite as much, but it's been going up a lot more. In fact, the NASDAQ was up about 6% this week, where the S&P and the Dow were only up like 3% this week. So that just goes to show you that the NASDAQ had a really good week in spite of being a laggard compared to the other major averages. Tough to call 1.38% gain a laggard. Small caps had a really good day, up over 4%. Small caps have been getting hammered, so that's really impressive. And the VIX, the fear gauge, the volatility index, is under 40 for the first time in a long time. You know what I noticed? Even when the market does go down, the VIX was up to about 85 about 3 weeks ago. But even on a down day, the VIX doesn't go up quite as much, which means the fear isn't as built in. And a lot of, selling has been reduced. So even on down days, the technicals have still been looking pretty good. And the S&P went over its 50-day moving average today for the first time in weeks. So that's pretty significant, meaning that there's a lot of people who have stopped selling and a lot of people who've started to buy again. Obviously, that was the case for this week. It was the case for last week. Last week, we had a holiday shortened week, if you recall, a Good Friday last Friday. And we had a really big week. Last week was one of the best weeks ever in the history of the stock market. This week was another solid week. So all of the major averages are 25% higher since the March 23rd low. That March 23rd low is something we've been talking about a lot here in Be the Boss of Your Money, when I boldly claimed, rightly or wrongly, that that was the bottom. I said that on the 24th, and the further we get away from it, the more comfortable I feel with it. Again, when I call tops or bottoms, this, it doesn't mean I'm changing the way I manage clients' assets. I don't manage my clients' accounts based on tops or bottoms. I don't just swing from cash to stocks back and forth and try market timing. I still invest according to my clients' risk tolerance, time horizon, objectives, their own unique views of how they want their money managed. It's a personal thing. It's what puts the word personal into personal finance. So let's keep going with this. I want to show you a few more screens, okay? Here's a chart of the Dow, still a bit below the 200 moving day average, but not too far. And look at this rally we've had. And as good as the rally has been in the last few weeks, Monday will be 4 weeks since we hit the March 23rd low, but we still have a long way to go to get back to where the major averages were. But for the year, major averages aren't really down much, maybe down a little over 10%. I have to check that, but we're actually in pretty good shape. If you just took a look at where we are for the year compared to last year, I don't think people have too much to complain about, providing that you're in, let's say, index funds, that sort of thing. And by the way, when I talk about the index is S&P 500, for example, you cannot invest directly into an index, even though, fees, expenses for these funds are pretty much down to zero or near zero. You still can't invest directly into an index, but you could invest in a security that mimics or imitates or tracks an index. Okay, so just have to get that out of the way. Let's keep going with this. You having fun? I love this stuff. Let's take a look at the big market movers today. A lot of them, you see Holly Frontier, Marathon. Those are oil companies, Valero, Hess, EOG Resources, Devon, Halliburton, Conoco. So clearly energy is the winning sector of the day. And if you take a look at some of the decliners, Netflix was off a little bit. United Health, Electronic Arts, Take-Two, ATVI, that's Activision Blizzard. Amazon was off a tad bit. Campbell Soup was off a little bit. You notice that the stocks that were off today will maybe give you a better view, like this. Clorox was off a little bit. Even Zoom is off a tiny bit. I said the other day is if we could make an ETF, like a coronavirus ETF, it would have Zoom, Activision, Blizzard, Amazon, Netflix. So it looks like to me, the coronavirus stocks, the make pretend coronavirus stock ETF, took a breather while the rest of the beaten up sectors in the market were um, able to really rally. Okay. So those are the market movers. If you take a look at some of the Dow stocks that really pushed the market up, you take a look at Boeing. Okay. Boeing was up just about $20 a share. They came out and announced that next month they're going to, or later this month, they're going to get back to constructing, to building airlines again and start calling in people to work. And that is significant. Boeing is the biggest manufacturing employer in the United States. So that's pretty significant. ExxonMobil was up just about a little over $4. JP Morgan up almost $8 a share, up almost 9% gain. So some pretty significant movers. The losers in the Dow were all pretty small. Again, Walmart. Walmart, I would consider that a coronavirus stock as well. So that was off a little bit. Apple was off a little bit. It caught the rare downgrade. Apple was downgraded today by Goldman Sachs. So it's a pretty big call there. And they think the stock goes down about 20%, basically saying iPhone sales are not going to be robust. So that's a pretty bold call to downgrade such a strategic and a financially strong company. But hey, that's the way it is. So let's go on. I want to share with you. Well, actually, I'm going around here. Let me show you the biggest winner. So like we said, I take a look at the ETFs, the spiders, okay, from State Street. You've heard of spiders ETFs. XLE, that's the energy sector, U.S. energy sector, up 10.6%. Followed by financials up 5%, industrials up 4%, building materials up 4%. You could tell that this was a very economically cyclical led rebound. And at the bottom, everything was up today, but technology has been doing well as of late. But at the bottom of the winners, how about that? And staples was also a little bit on the lower end of the winners. But nonetheless, it was a great, solid day in the market today. Nothing to complain about. So right now, I just want to do a couple of quick shout outs and see who's out there. Bill, hey, Bill, thank you. Bill Conkle, thank you so much, Bill. I really appreciate you always showing up so consistently. You make my day when you do this. I hope that I am, bringing to you tremendous value and making you a better investor, so that better with your money, better with personal finance. I have a feeling you're pretty good already with your personal finance and your investing and all that good stuff to begin with. So thank you for joining me. And we've got some people out here in LinkedIn land as well. And who is out there? Niall Natshe. Thank you very much, Niall. Good to see you. And I think you're new around here, so welcome to the show. And if you have any questions, hit me up. I'd love to answer them. So let's move on to something else here. All right, something I read, and then after this, I'll stop the share screen. Something that I read, and I follow a company called DataTrek. It's managed by someone I'm connected to for a long time, named Nick Colas. Nick Colas and I, we've never met in person, but we've emailed each other before, and we've been quoted in the same articles on CNBC. We're both quoted pretty regularly, if I may say. It's not a humble brag. I'm just saying that's how I know who Nick is. We've both been quoted many times on CNBC and sometimes in the same article, and he puts out fantastic research. And one of the things he wanted to point out is the 5 largest names in the S&P 500, Microsoft, Apple, Amazon, Google, really called Alphabet, and Facebook, are notionally big tech, but they sit in 3 different sectors. So Microsoft and Apple are in the tech sector, of course, and Microsoft is 22% of the tech sector weight of the S&P Standard & Poor's tech sector weighting, and Apple, is 20%. So since Apple's only down about, a little over 3% year to date, and Microsoft is up 9%, you could see, getting my compliance approvals in, that is awesome. You could see how the tech sector is looking particularly good. But if you took out Microsoft and Apple, the tech sector is actually down 7% year to date. You see this, down 7% versus up over 5% year to date. After today, we'll call it up 6% year to date. So you can see how the weightings, 42% of the tech sector is just in two stocks. Some people consider that a dangerous thing to be so dependent on just a couple of, big cap stocks. We go on to communications. Google and Facebook are now considered communication stocks. Yes, they're tech stocks, but they're in the overall consumer space. Communications is down 11%. Google, Alphabet down a little over 5% year to date. Facebook down 13%. So the conclusion is, if you took those out, it's still basically a wash that the communications sector would still be down about that much, about 13%. Okay. And Amazon is in consumer discretionary. Amazon's 25% of consumer discretionary, up over 25% year to date now. And consumer discretionary sector is up 13.6%. Had it not been for Amazon, consumer discretionary would be down 19%. That just goes to show you how much of an impact Amazon has. The scary thing is if it goes the other way and Amazon becomes a negative, has a bad year, drags the whole market with it. In consumer discretionary, a lot of companies like Michael Kors or Capri, that I guess owns Michael Kors. So you have a lot of consumer discretionary stocks. Let's say Under Armour and others that are down. So Amazon just pulls everybody up. Amazon is like a black hole. It just has such strong gravitational pull. Not even light can escape it. Okay, I'll stop with the share screen now. So what else do we have here? All right, so the bulls are out in force. And you ever notice that when the market has a big up day, a lot of people are out there saying, oh, yeah, I knew the market was going to go up. Yes, it's going to be really great. Sky's the limit. When the market's down, you have a different group of people. Oh, yeah, I knew it was going to be down. I think we just need to stay even keeled. I mean, if you didn't make the call that the market was going to turn around and you can't show it, you can't document it, I don't want to hear about how anyone thought, some analysts thought that, the market was going to up. I knew it was low. Did you put it in writing? Because you could say that. Oh, I told my friend it was going to be up. Prove it. I'm just like that. I like proof. I like data. Makes me a little, I don't know. I'm annoying like that, maybe. Okay, I'll go with that. So if you recall last week, we were talking about Goldman Sachs and JP Morgan getting on the bandwagon, Jim Cramer from Mad Money getting in the bandwagon saying, hey, maybe we actually already hit the bottom and things are starting to go up. So let me just go on a little bit longer here. Then we're going to end this. Okay. So we have a few people out there. I appreciate everybody. Thank you so much. All right. So why is the market going up? Well, first of all, we have had horrendous economic news, really lousy earnings reports. But, President Trump is talking about opening up the country again. A number of governors are talking about opening up things again, or at least they're talking about a plan to open up. Listen, we don't know if things are going to open up May 15th, May 30th, May 31st, June 30th. We don't know. But if we start to get the feeling that, or the optimism that things are going to start opening up, then, that's bullish for the market. Because don't forget, we still have all this massive stimulus from the Fed and from Congress coming in. We've got fiscal stimulus. Fiscal stimulus is the kind of stimulus that comes from Congress and signed by the president, the executive branch, and monetary stimulus comes from the Federal Reserve. We've got a ton of both, more so in a few weeks than we've gotten in the entire Great Recession of 07 to 09. So that's really the market wrap for this week. So don't forget, please check back with us on Monday. I have a special guest, Michelle Blum of Nutrish is going to be our guest. I'll post a few things on LinkedIn and Facebook to let you know and to remind you. She's a terrific person to speak with. She's been my guest before, and she's always terrific to have, and she always has very interesting things to say. And I've always gotten good feedback from viewers that she's just a terrific guest to have. So the last thing, we'd be remiss if we didn't say remdesivir. That's the drug from a company called Gilead. And that drug has shown some promise with COVID-19 patients. They have Gilead itself, the company that manufactures the drug, has come out and said this is still anecdotal. We're not finished with placebo and double-blind tests, et cetera. So we've got a long way to go, but it does look promising. But we've seen other drugs for major maladies that have looked promising that didn't come through. But this remains hopeful, and it's being tested in a lot of places by a lot of people. So that's what we're hanging our hat on. That's about it. And I thank you for watching. I'd like to wish you good health, good well-being, good physical and mental well-being. And I hope you have a great weekend. And let's come back fresh on Monday. Thank you so much. I'm going to end the broadcast.